you guys today to our show, and we're going to have some fun today. I got a special guest on with me today, which I'm excited to do. It's my first time having a guest on the show, and I'll be introducing him shortly. But I want to just let you guys know where you are right now. You are right now at the Note Investing for Newbies show. This is a show where we talk about what note investing is and how to use note investing to create extraordinary results in your life as far as cash flow goes. Maybe another way to say that is I teach ordinary people how to create extraordinary passive income in their lives to build a secure retirement. So that's what we like to do here. Welcome. Want to welcome Brian. Welcome to the show, Brian. Nice suit, by the way. Nice tie. Dude, sharp. I like it. Welcome to the show. I'll just pop my guest on briefly here, just so you guys know who's here with me today. My guest today is a gentleman that has been in this business for about a year and a half, I guess now. We'll find out the full story, but he is a very successful note investor, and I'm really proud to know him. There he is right there. That's Mr. Patrick Franz. Let me say hello, Patrick.
Hello, everybody out there. Hi, Desi.
Hey,
Thanks for having me on your show. I appreciate it.
Yeah, I'm so glad you're here. All right, I'm going to put you back into the lobby there, Patrick, and then I'll bring you back in shortly, okay?
You got it.
All right, so I want to encourage you guys to like and share this show today. We're going to be talking about Patrick's journey in this note space. Oh yeah, I see Patrick Franz here. That's good. We're going to be talking about Patrick's journey in the note space today, and it's very interesting. I think he comes from a really good background. You guys are going to like that. For those of you that want to know what a note is, what I have is that I have my little introduction that I'll go through with you here today to just kind of give you a heads up of what a note is, because this is note investing for newbies, and sometimes people don't even know really what a note is. And I know that some of you are watching this in replay mode. And so I'm going to make sure that we're all on the same page. So our show is the Note Investing for Newbies show. And so here it is. What the heck is a note? And what is note investing, right? So here's what note investing is. Note investing is when you buy somebody's mortgage. Now, I had been in the mortgage business for a long time, and I knew mortgages had been were bought and sold. I just didn't know that a private individual like myself or like you could actually buy one. Okay, but I guess we can. And now I'll be showing you guys how to do that, exactly how that's done. Here's what I need you to do. Understand that when you're investing in mortgage notes, you have to start to think like a banker. Okay, banks don't flip houses or buy rentals or invest in stocks or anything like that. They don't buy mutual funds or Bitcoin. What banks do is they're in the lending business. Okay, and they lend money to people, and in order to make sure that their investments or their lending is solid and secure, they require collateral, right? You all know what that is. Collateral is something that the bank can take from you if you don't pay them back. For example, your house, okay? And so, with that said, when you buy a mortgage note, you literally are stepping into the bank's shoes, and you have the right to take the property if people don't pay you back. I'll give you a real quick example here before we get into our interview with Patrick Franz today. I'll just share a real quick example here for you guys of how this actually works. So, for example, let's just say that a bank has a note for sale, and because, by the way, that's what happens. Banks are selling their notes. Now, if you've ever owned a house, this will ring true to you. You probably would have received a letter at some point of owning your home from your existing mortgage company saying that your loan has been transferred to another lender. Right? When that happens, believe it or not, your loan has been sold. That's what happens. And all we're talking about is how you can be that person buying someone's mortgage. And that's what we're talking about here. But once you do buy the mortgage, here's how things look for you. Okay, here in this example, let's just say we have a house that's valued at $130,000. And let's say the loan balance that they owe is $64,500, and they're paying $396 a month in mortgage payments. Okay, I know that's super cheap for a lot of parts of the country, but that's also kind of normal for a lot of parts of the country too. We're a big, diverse country, and there are lots and lots of homes where this is a typical scenario. But let me just walk you through what happens here. When that mortgage note gets sold by your lender or by the lender to the new investor or new lender, which could be me, it could be you. But when that mortgage note gets sold, it gets sold at a discount. And what does that mean? That means that the buyer of the note doesn't pay $64,500 for that debt. They pay something less. In this particular example here, we're saying that the buyer would pay $47,500 for that debt. And you may be asking yourself, why would the bank, since they're owed $64,500, why would they sell it for $47,500? Well, the reason is because it's in their best interest. And I don't know exactly what that would be, but they wouldn't do it if it wasn't a good deal for them or if it wasn't in their best interest. And this is how this business is done. Mortgages are sold between lenders all the time, and they're sold at a discount. So that's just a reality of the space, okay? So when you buy a mortgage like this, what happens is now you are the lender. The homeowner actually owes you $64,500, even though you only paid $47,500. So you have instant equity. I like that. If the people were to sell that house the next day, they have to pay you off $64,500, right? You put the difference in your pocket as profit. But suppose that's not the case. Then one of three things will happen. They're going to pay you like they're supposed to every month. That's $396 a month, right? Or they're going to pay you off early, meaning they may sell the house at some point, or they're going to not pay you, right? Whenever you lend someone money, that's kind of the way that it works. Either they're going to pay you back like they're supposed to, or they're going to give you back your money before they're supposed to, or they're not going to pay you. And I'm going to show you just an example of how each of these would play out in this scenario, okay? If these people were to pay back like they were supposed to, there were 312 payments remaining on this particular mortgage. So if they were to pay back like they're supposed to, it would be 312 times $396.83. That comes to roughly $123,800. So if these people were to pay you back like they're supposed to, then, and you were the one who bought that mortgage for $47,500, you would earn 9.1% per year on your investment dollar. That's an excellent return, especially considering that today most banks are paying 1% or less. So leaving your money in the bank is just not a good idea. When you can put it to work like this, it's a better idea, as long as you are not at risk of losing it, right? In the bank, at least you know you won't lose it. So let's take a look at this and see how this compares for safety, okay? Because safety is always very important when we deploy our capital. All right, so option one, outcome one possible, right? They pay me like they're supposed to. Outcome two, maybe they pay me off early. Now, does that ever happen? Absolutely. Have you ever sold a house and then paid off the bank that you owed? Of course you have. Most people in America sell between 5 and 10 years in there. Most people sell their houses or refinance their houses at some point during that period of time. And when they do, they pay off their existing lender. So let's just say in this example here that these people paid on the payment for 5 years, and I was able to collect payments for 5 years, and then they sold the house, okay, and moved on and bought another house. So for 5 years, I would have collected 60 payments of $396.83. That would be a total paid to me over the 5-year period of $23,800 roughly, right? The balance on the mortgage would still be $56,780. So you add all that together, and my total payback on this particular mortgage would be $80,500 and some change, and that would be in 5 years. So to take $47,500 and grow it to $80,500 and change, and receive payments along the way, that represents an 18.6% annual yield, 18.6% per year for 5 years. That's a fantastic return, right? Fantastic. But here's what everybody's afraid of. What if they don't pay? That's what everybody's always afraid of. Well, here's what happens if they don't pay. So same scenario. They pay for 5 years and maybe they lose their job or they get a divorce or something happens and they stop paying. Does that ever happen? Of course it does. So let's just say that 5 years in, they stopped paying. Over the 5 years that they were paying, I collected $23,800. Once they stopped paying, I can then sell that property. Okay. I can foreclose and sell that property, or they can just give me the property and avoid having a foreclosure on their credit. That's an option. And I have found personally that a percentage of the people will do that. They don't want a foreclosure. They just walk away, give you the deed and the keys and say, I'm out. Either way, the house is mine at that point and I can put it up for sale. So if I were to sell this house for $115,000, I've already collected $23,800 in payments. So all total, I will be collecting $138,800 in 5.5 years or so, right? 5 years plus a little bit of time to take the property back. That represents a 28% return on my money. So as you can see, when you're the bank, life is good. That's why we invest in paper. And this is why it's a mission for me to get out and spread the word, because people don't know this. They leave their money sitting in the bank. They earn 1% or 2% or 3%, and they think they're doing okay, when actually they're not. They could be earning 9 to 28% in this particular scenario safely, collecting cash flow along the way. And it just makes far more sense. Okay. If you want to know about how this stuff works, get to my website, investbrilliantly.com. And on my website, you'll find information about how mortgage note investing works. You can also find information on my website about my training program, in which I will be happy to take some time and teach you how to invest in mortgage notes. And if you even want to get into start your own mortgage note company, investing company, I'll show you how to set up that business. We call it a note dealership. Either way, this is a page for my website. This is the homepage. It's called investbrilliantly.com. Click on this button right here. Tell me about the coaching program. Third button down, and you can get more information about that. But even if you don't want the coaching, I will be happy to speak with you. You can have a free 30-minute consultation with me. We can talk all about note investing, see if it's something that you might want to know more about. Okay? So again, I want to ask you guys to like and share. I'm going to introduce my guest here, and we're going to talk about note investing from Patrick's perspective. Let me just go ahead now and put us back up on the screen. All right, here is let me see how to get us both on here, Patrick. That didn't work? That's not you. Okay. All right. We should be able to do this. All right, Patrick. Well, I can't get us both on at the same time yet. I don't remember how to do it, but that's okay. What I'm going to do, Patrick, is I just want to tell a little bit about your background that I know, and then I'll let you tell your whole story, okay? Patrick is a great gentleman. He's an overachiever in everything that he does. So his results will not be typical, okay? Just because he just doesn't do anything typical. That much I know about Patrick. And I want you guys to know he comes from a background of business background that's very varied. And I'll let him tell his story. It's a pretty interesting story, just some of the things he's done. As a matter of fact, I have to remind you, Patrick, we've only got a short period of time, so don't tell your whole story, okay? It's as interesting as it is, and it truly is interesting. You guys could get a phone call or something like that with Patrick at some other point. But Patrick does have a background as a homeowner. He had no experience at all in the real estate or mortgage note space up until just recently. But just in that short period of time, he has amassed himself a nice portfolio of mortgage notes, cash flow notes, and non-performing notes as well. And he is making good money. He quit his other job that he had, and he's full-time in the note space now. And I'm sure he doesn't regret that. I know that because I see him all the time. We work in the same office. He works in my company, but he's also my star student. And so Patrick, Franz, here you go, sir. It's all yours.
Wow. Well, hopefully you can hear me. I have my earbuds in for the interview. And what an introduction. I thank you for that. And I suppose I'll start with what you wanted me to start with, which is my kind of eclectic entrepreneurial background and my sales skill set that provided me, I guess, a little bit of leeway to get into this business with some skills that I brought from my past. But yes, you're right. I knew nothing about mortgage notes. I had come from primarily a sales background. And, prior to even doing that, I was just a competitive athlete. And so essentially, as you said, not doing anything normal, I grew up in a highly competitive environment, which started with gymnastics and spawned into, I believe, 23 different sports. And so I was always built to win. I wanted to win. I've been highly competitive in my life. And when I got into sales, of course, then I wanted to sell the most out of all the other sales reps in any company that I was a part of. And so just my sales background was extensive, and I became a sales trainer and all those things, teaching people how to close the deal, right? But then in 2005, I started my own business because I had an invention idea, and we raised quite a bit of private capital in order to create that invention and launch and sell that company. And so I was at least a little bit familiar with raising funds, which I think helps when you get into the note space. And so my background had nothing to do with real estate, nothing to do with mortgage notes, except for when I owned my house, I paid payments, interest on a mortgage to the bank. But yeah, thankfully for you bringing me into the space and becoming my mentor, definitely, like you said, has changed my life for the better, and hopefully my family's future as well.
Yeah, well, I'm sure that it has. I'm a big believer that if you'll just hang in there with this business, it's game over as far as your financial life goes. I mean, it's a winner for everyone that's willing to hang in there. And Patrick is doing a great job. He's a fast learner, really smart guy, and a hard worker, and all the good things that are required to make this thing successful. So, Patrick, how long ago did you get started in mortgage note investing?
Well, I'm horrible with timing, but a year and a half or 2 years ago, I guess. I mean, I suppose for 6 or 8 months, you tried to tell me about notes and convince me how great they were. And I guess for 6 or 8 months, all I did was try to find the too good to be true part of it and shoot holes in it. And probably on a weekly basis, ask you a bunch of annoying and silly questions about it.
That's true.
Because, when I first heard about note investing, first of all, it's weird to most people to know that you can own someone's mortgage on their house. It's just a strange thought. So first of all, that kind of gets people sideways. And then when you started talking about some of the ROI that some of these investments can yield, I thought, no, that just doesn't make any sense. I was used to the high risk, high reward world of venture capital, where people would put their money into a deal with a high likelihood they may lose all of it. But on the whim of hitting the home run, they would make 5 or 10 times on their money. And that was always the lure behind that. But nothing that you could make these type of solid returns with this type of safety. So when you combine a safe investment with high ROI, it becomes something that people say, too good to be true. And yes, I was that person for quite a long time. So
big time, dude. Big time.
Thank you for putting up with my questions.
Yeah, big time. I have to tell you guys personally, Patrick is engaged to my daughter, and man, it was like I had to drag him along at first because he just couldn't believe it. And if he weren't engaged to my daughter, I just would have said, well, just go away. You know what? Don't forget it. I'm not trying to convince you. For those of you that know me, I don't try to convince people that they should do this. I share it. If you see it, so be it. If you don't see it, so be it, right? But it was important to me that Patrick really did see the light on this. And so I'm really happy that he did come around, and it's going to help to change his life and the life of my daughter and my granddaughter. And so thank you, Patrick. I'm really happy to have you in our family too. So Patrick, I know that you've got a few deals going, and everybody likes to hear about the good ones and the bad ones. So in the time that we have left, would you mind sharing a little bit about maybe a note either that you like or something that you see or have seen that you maybe wish you could have taken advantage of? And then if time permits, maybe share something that maybe made you a little nervous.
Yeah, I can do all of that and probably pretty quickly. So let's start with the bad. Let's start with the bad.
Okay.
Everybody wants to know the risk and how bad things can be and all that good stuff. Well, you know, we talked about the note that I had with my partner that we called the ugly duckling because it's made me nervous time after time after time for the past, I don't know, 6 or 8 months or something like that. And for people that don't understand, the reason being is we bought a non-performing note where the property was vacant. And there was a lot of work to be had and a lot of issues to move through, being that I'm in California and the property's in Alabama. So I'll make a long story short. After doing a clean out of all the leftover junk from whoever used to live there prior, having an old car towed out of the driveway that was abandoned, and having the weeds cut down, and just so many things that had to happen to try to get out of the asset, and then having several offers that fell through, and so on and so forth, and me thinking, oh my goodness, I don't know if this is going to turn out to be good or bad. But in the end, why we call it the ugly duckling, it's going to be a swan. We've got a lot of offers now from investors, and some of which are going to work out very kindly for myself and my partner. And so the point of that story is just to be said that if you buy these notes correctly and you do your due diligence properly, I don't want to say there's no way you can lose, but you know, there's a 1% chance that you can lose money. 99% chance you're going to make some money. How much sometimes is the question, but certainly won't go backwards. And that was what I was afraid of. That's what gets us puckered up, so to speak, like I like to say, and makes you nervous about pulling the trigger on investments, is the chance of loss. And the good thing about the deal I'm talking about in Alabama is that it's going to become a winner. Not as much of a winner as we would have hoped in the beginning when we purchased the asset, but still yet a winner, where my investor partner is going to make more than 12% on their money for the time being in the asset.
Wow.
Yeah.
That's not a home run, huh?
Talk to people about 12%, and they'll say that's got to be too good to be true. But honestly, you know, in some of these deals, as you know, Desi, 12% is I don't want to say it. Yeah, it's just okay. It's just okay. So that's one maybe that I've been involved with that was scary kind of in the beginning. The numbers were right, so we bought it. It's been kind of scary throughout and made me nervous. And yet, again, in the end, when the dust settles, it's going to be a good return for my investor partner. And that's really the main concern with me, is that my investor partner gets taken care of and that they're happy with the investment they made.
I remember you really sweating and kind of like worrying about that asset.
Yeah.
And I know that I've told you on multiple occasions, you know what, it's on the exit that you really can make your money. And for those of you that are brand new to this space, what that means is when you buy a mortgage note, that's when you're entering that trade, right? And now you own that note. But there are ways, once you are leaving that note, you're selling it, or you're refinancing it, or you're modifying it, or you're foreclosing on it, or you're renting it to own, or whatever. We have so many exit strategies that we can find a way to make a profit on almost every scenario. And that's, I think, why Patrick said 99%, because it's just, you have to look for a way not to make some profit, right? But you didn't get that, a year ago or 8 months ago when you were still relatively new in the space. And I knew that you were going to be okay from day one. And there's a saying in real estate, and I've heard it since the 80s, and that is, you make your profits on the buy. Now, if you're new in this space, or if you're new in investing in real estate, you may not know what that means. But it means that if you buy right, you don't overpay, then in fact, you have room to make money even when things go a little bit sideways, right? So you make your money on the buy. And that's what you do with notes, because you're buying right, especially when you buy through our service, through our company, because that's what we do. We vet notes, we negotiate aggressively, so that when people buy their notes through us here at the ACI Legacy Group, they buy right. So,
Des, I think you said it best once I heard you say something that was a perfect explanation of what we're speaking about. And that was when you said, if you were playing in a football game and you knew that you were guaranteed to win the game, but yet at halftime you were 2 touchdowns you were two TDs down at halftime, would you be stressing out? If you knew ultimately by the end of the game you were guaranteed to win, would you stress out if at halftime you were 2 touchdowns down?
No.
And that was a good analogy that should make sense to a lot of people.
I like that. Thank you for reminding me of that. Yeah, that is a good analogy because that's kind of where we are, right? That's where we are. So you don't worry about it, what's going on in the middle. Just keep pushing forward. Thank you for sharing that story. That is a good story.
What about a win? How about a good one?
I'd like to hear about a win.
So here's an interesting one. I was actually speaking to a hard money lender about this deal the other day, and the hard money lender was saying that they do their hard money lending at about 12%. And they understand that hard money lending is quick, not very long term. So once they exit out of a hard money lending deal, they've got to have another one lined up to get into to keep their money rolling. And I said, exactly right. But I was going to tell them about the upside of the note business. So I explained to them that non-performing note that I bought in Michigan. That was, I think we invested $37,000 to buy into the note. The unpaid balance was supposedly around $64,000 based on the standard loan and timing, but turns out because the borrower hadn't paid a mortgage payment in 2 years or 2.5 years or something like that, all the arrearages and late fees that had compounded had created a new unpaid balance of $114,000. Now, this is on a property that's worth $140,000. And so if you figured that, those are the numbers. Property worth $140,000. The unpaid balance was supposed to have been $64,000, and we bought in at $37,000. After owning the note, we found out that the arrearages and all that accrued was up to $115,000. So as people will tend to understand after they take more lessons from you, Des, is that when you become the bank, you have tons of options. And one of the options that we had was to go ahead and foreclose on that gentleman because he was so far behind, and we had the right to do so as the lender. We could have foreclosed on the gentleman, and we could have had a house worth $140,000. Put $37,000 in.
Wow.
That was going to be huge, right? It was going to be huge. And if you're an ethical person like I try to be, and if you're good to people, I rarely want to have to foreclose on somebody and kick them out of their house unless that's the last ditch effort. And so I'm always looking for something to do other than foreclose. And in this case, the gentleman had some sentimental value with the property and had been there several years, done some improvements to the property, so on and so forth. He only got himself in a bad position as a borrower because he broke his back at work and had some real hard times. And that's understandable. So, I'm not a big bank. These guys, these borrowers are not just a number to me, right? Mm-hmm. I'm an individual, and I like to hear stories. Everybody's got a story, and sometimes you can take it for a grain of salt. But he had a good story, and it was true. And I wanted to keep this gentleman in his property. So I could have claimed $115,000 or $114,000 of unpaid balance, and I could have told him he owes me that now, and I could have tried to do a loan modification that way. What I decided to do is I decided to give a $15,000 concession. I just wanted his new loan to be under $100,000. It just sounded better. And the guy had gotten himself in so much trouble. I thought, well, let me just help this guy. Didn't have to do it, just out of the kindness of my heart because I wanted to do it. And we can do that. We can make those calls in the note space. And so what I ended up doing, and to tell everybody the end all be all ROI on this investment, it'll blow people's minds. And like I was talking to a hard money lender just over the weekend, and it blew his mind. He said, I got to talk to you more about these notes, man, because this is a win. And listen, it's a win for me as the investor, big time when you hear these numbers. But the cool thing is it's also a win for the borrower where I didn't have to foreclose. He gets to stay in his house. Okay. So what I did is I forgave $15,000 off of the $114,000 unpaid balance. I did a new loan, 20-year term at 9.9% interest rate. And his payment is $948 a month to me for the next 20 years. Now, if you put that in a calculator, it's about $240,000.
$948 a month?
$948 a month for 240 months.
What? Yeah,
9.9%.
$27,000 on a $37,000 investment.
Yes.
Jeez.
Yes. So essentially,
That's pretty good. Hit me up in the chat there. Who thinks that's pretty sweet for Patrick and for the homeowner as well? Let me see your comments in the chat. Patrick, I think that is phenomenal. And so now here you are. You put out $37,000 and some change, and now you're collecting $1,000 a month, roughly.
Roughly $1,000 a month for the next 20 years. Yeah, and of course, Des, we laugh because look, the guy's house is still worth $140,000.
Oh yeah, that's right.
That's still my collateral if he decides he wants to default in some way or another on the new note.
Wow.
Yeah.
See, so let me just tell you, man, that really is phenomenal. And those kind of deals are what I see all the time in the note space. And I'm really happy that you shared that story with us, because that's the kind of stuff that people don't quite get. They look and they say, oh, this is a little $37,000 mortgage and the payments on it are only, $380 a month. What do I want with that? Well, when you're in the money business, you learn how to make money within that space. And so one of the things that we like to do, and Patrick is helping me to do this, we like to teach people how to make money in the money business. And by the way, guys, my favorite saying is, what do I say, Patrick? The money's in the money business. Money is in the money business, baby. That's right. Mm-hmm. So guys, you guys need to know that this really does make a very big difference in people's lives, including yours. You can do well by doing good. Here's a guy that was any other lender, any bank would have just kicked him to the curb. You forgave $15,000 in debt. You modified the mortgage note for him to give him a fresh start. Doesn't lose his house. Didn't ruin his credit. I mean, that's just fantastic. That's fantastic, Patrick. You're such a nice guy. You should have a white beard and a red suit. Well,
here's the deal. One of the things that people really need to think about is that you can do extraordinarily well financially in the note business without being greedy.
Yeah.
You don't have to be greedy. And I think that if some people get into the space and become very greedy, then their note investing career will be very short-lived.
Yeah. Oh, it will. And I've already seen a few people like that. I've seen them come and go, and I haven't been in the space that long, just 7 years. And I've seen people come and go, but they come in with the wrong mindset. They come in with the mindset, I'm trying to make money instead of I'm trying to help people. Zig Ziglar, one of my favorite, motivational speakers ever, he said, you can have everything you want in life if you help enough other people get what they want. And that has been kind of like what my goal has been. Who can I help? How many people can I help? Right? And by helping others, I don't worry about the money. The money always takes care of itself. It always does. And Patrick has embraced that same philosophy, and I really am happy to see that as well. So we don't worry about the money. We just want to help people. Patrick, thank you so much. That's excellent. And by the way, Patrick, how can people reach you?
I have a website. My website is thenotementor.com. And, I'm with you, Des, that if you've learned something of value and it's provided value for your life, we have a moral obligation to share it with others. And that's what I'm doing now, is helping other people to learn note investing, because I believe it's one of the best investment vehicles that there is out there for anybody to invest in. And you don't have to have a lot of money. I mean, we're getting notes for $25,000, $30,000, $35,000 on the small end when we're playing in first position. But they can get a hold of me if they want to know more about what it is I do.
Yep.
And how they can get involved. So they can go to thenotementor.com, and right there on the homepage, there's a little link to my calendar that they can click on to schedule a free 30-minute consultation. And I'm open to answering questions that people may have, because again, I feel as if I have a moral obligation to pass on this knowledge to other people. It's not something that you keep to yourself. I feel like we found a very, very huge gold mine, and no matter how much you and I go in there and dig with our single shovels, we'll never get all the gold out. And so there's no problem with bringing other people who have shovels into our gold mine to help us dig out the gold. There's enough room for more than just me and you in the space.
So. Totally. Yeah, we can't possibly do it. By the way, for those of you that wonder how big the note space is, I don't know exactly, but I can tell you this: it's much bigger than the real estate space. So if you know how many houses are out there and how many houses are being sold every year, you can probably multiply that by 4 or 5 or more. And that's how many mortgage notes are being sold every year. I mean, it's a huge space. And unlike real estate, in which everybody and his brother is talking about it on TV, flip this house, flip in Vegas, all that stuff, who's talking about notes? Nobody. Nobody out there is talking about notes. So it's not only is it huge, it's virtually virgin as well. So if you learn how to get yourself a foothold in this space now, ground floor, your life it's game over. Your life will never be the same. You just never, the key is never stop doing this. Just never stop. Every single year you will be wealthier than you were the year before. You will help more people each year, and it just starts to compound. Just never stop. And guys, that's what I'm saying right there. That's what I'm all about. Patrick, thank you so much for your input today. You're a great guest to have on. Patrick's a high energy guest, and I like that. High energy person in general. This is him at the calm right here. He's really calm.
I'm on your show, so I'm being docile.
Yeah. Don't seem like this too often, not at all. And I want to one more time. I want to invite you guys to like and share this. This is on Facebook. It's also live on YouTube right now. Please share this with people so that they can learn about this valuable space. And once again, my name is Desi Arnaz. You guys can invite them to get over to my website as well if people want to understand more about mortgage notes. My website is investbrilliantly.com. Patrick, thank you so much for being my guest on the show, everybody. If anybody has any questions for Patrick, I will right now open it up for some questions before we let him go. And if there are no questions, we'll just go ahead and wrap up the show. So, Patrick, while we're waiting to see if there's oh, look at this. Someone says, thank you. Thank you for sharing, Patrick. Maurice says, thank you. Yes.
No problem at all, Maurice. No problem at all.
Yeah. Great info, guys. Kyle says, thank you very much.
Let me add in closing, Des, if we're going to end the thing, but let me add to that. That's a good point you made. And you know that there's a lot of people that say if you're running with the masses, you're going the wrong way. And there's so many people out there that are advocates of house flipping. And I am too. There's nothing wrong with it. Also, wholesaling. You're hearing everybody that wants everybody else to get into wholesaling houses and all that. I'm also an advocate of that. I'm not talking trash on any of these. But if you're going in the direction in which everyone else in the masses is going, you're going the wrong way. And with the diminishing inventory, the way the real estate market is right now, and how many people competitively are in all of those spaces, I personally wouldn't dive in. If you would dive into mortgage note investing, like you said, there's a plethora of inventory available. There's millions of deals to be had. And the competition you deal with from other note investors is so minimal, it's almost laughable.
I know.
I can't even believe it. So like I said, I believe we did find a huge gold mine here with mortgage notes. And I wish more people would grab shovels and jump in. Yeah.
Patrick, you mentioned that $30,000 entry point. Well, I can tell you guys, you can certainly enter this space with less than $30,000. There are creative techniques, for example, buying partials, buying second mortgages. I've seen second mortgages for as little as $1,000. I don't sell them, but they're in this space. And if you don't have any money, there are ways you can get started in this space using other people's money. And I teach people how to do that in my coaching class. So you can go to investbrilliantly.com, sign up for the coaching, or at least look into the coaching that I have listed on the website. And if you decide that you want to be coached, I'll show you how to invest in the mortgage space using OPM, other people's money. All right. All right, Patrick, it looks like that's what we got. I want to thank everybody once again for coming on to the show today. Share this show, please. The Note Investing for Newbies show, it comes on every Monday at 4 o'clock Pacific. And I just want to invite all you guys to come back again next week. Patrick, you have a great one. I'm Desi Arnaz, professional investor, and wrapping it up, guys. God bless you all.